10 years ago, Jersey City was the city you saw only out the train window: gray storage buildings, bruised factories, crumbling sidewalks, and the subdued hum of a neglected place. But tonight, if you look across the Hudson River, there will be light. Glass and steel skyscrapers. Luxury apartments glinting like a second Manhattan. Rent prices breaking records. And headlines proclaiming it the next big thing. This is not accident. This is strategy, timing, and a stealth revolution decades in the making. This is the unofficial history of Jersey City's real estate boom, how it started, what fueled it, and where it's going next. To understand Jersey City's rise, you must rewind. For much of the 20th century, this city lived in New York's shadow. It was the working-class port that serviced Wall Street's empire. Goods came, capital went, and when the shipping trade withered in the 1960s, Jersey City plummeted along with it. Jobs vanished. Crime mounted. Thousands migrated. Property values declined so far that investors avoided it entirely. But hidden under the decay was promise of the sort that doesn't show up on spreadsheets: location. A PATH train stop away from Manhattan, waterfront land with unobstructed views of the skyline, and zoning laws just loose enough to attract creative risk-takers. The city just needed a spark. The spark arrived in the form of pressure, the pressure of Manhattan's relentless expansion. The 2000s began, and Manhattan's average rent prices were at levels unimaginable to young professionals. A one-bedroom that had once rented for $200 now fetched $3,000. Artists, tech experts, and entrepreneurs followed the river over, seeking space, affordability, and freedom. They found it in Jersey City's underappreciated warehouses and brownstones. The first cafes landed on Newark Avenue. Startups turned into storage facilities. PATH ridership soared. Slowly, almost invisibly, the character of the city shifted from industrial to entrepreneurial. Developers noticed. Cranes became ubiquitous by 2010 across the skyline. Waterfront projects like Newport, Exchange Place, and Journal Squared converted derelict lots into luxury spires. Each new skyscraper spoke the same language: New York convenience without New York chaos. Real estate firms rebranded Jersey City as Wall Street West. Cool investments called it a gold rush. Property prices here increased over 120% from 2010 to 2025. Rental costs increased by 80%. What had been worth $250,000 prior to this now was almost $1 million. The skyline transformed overnight not through chance, but through a convergence of demand, location, and vision. Yet all booms have their builders. At the center was city planning rezoning efforts that enabled high-rise development, infrastructure upgrades that kept traffic flowing, and tax incentives that attracted builders who had shunned Jersey altogether. And then foreign investment, Canadian, Chinese, and Dubai money buying up luxury units as long-term investments. While current residents who had lived in properties for decades suddenly found themselves sitting on gold mines. Some sold out. Others leased. Many got priced out. Gentrification was the cause and effect of growth. But behind all the gaudy skyline, there's a second narrative, one the billboards won't convey. Go west from the waterfront and find communities such as Greenville and the West Side, still populated with pre-war houses, neighborhood shops, and serene streets. These are the communities investors are waiting to observe now. Prices are still relatively low, but the growth trend is reflecting what downtown experienced a decade prior. Transit expansion and university growth are gradually recharting the landscape. An opportunity is where the next tide of it is not in glass skyscrapers, but in revitalized neighborhood sidewalks. The pandemic put another twist. Even as COVID came, remote work flipped space upside down. Humans wanted more room at home, at work, and in the outside world, all that Manhattan couldn't deliver. Jersey City overnight seemed ideal. You could be near the city but breathe like you were in the suburbs. Developers gambled big. Real estate technology accelerated electronic closings, AI-based pricing, virtual tours. Even small-time investors had access points through fractional property websites. Jersey City wasn't just competing with New York by 2023, it was out-surviving it. But all booms have warning signs. There is affordability, there is oversupply of luxury units, and rising taxes that drive out long-time residents, experts warn. The issue isn't growth anymore, it's balance. Can the city still grow without losing its soul? Can one be diverse, innovative, and affordable and chase wealth? That is the same question Brooklyn was asking 15 years ago. Jersey City is at the same crossroads today. In order to hazard a guess where things are going next, you can analyze data or you can analyze patterns. The path line charts value like a heartbeat. Neighborhoods within a 10-minute walk of a station get more valuable faster. Being on the waterfront is still worth it. Schools, hospitals, and cultural precincts are quietly creeping up. AI analysis of real estate data already shows trends. Increased demand for mid-rise, mixed-use developments, and 15-minute living neighborhoods where you can walk to what you need. Jersey City is right on that global track. There's also the ripple effect. As real estate prices rise, consumers cast their eyes elsewhere: Hoboken, Bayonne, Kearney, Secaucus. Each new community is a diminishing echo of Jersey City's revolution. Real estate investors refer to this as the radius rule. Keep going the next path stop, and you're behind the money trail. Astute buyers are already moving to the outer rings, buying up homes before the wave arrives. It's the same formula that converted Williamsburg from warehouses to gold mines in Brooklyn. Technology is speeding it up even more. With AI software now forecasting market trends, detecting undervalued houses, and creating blueprints, individual creators can match large firms. Visualize inputting zoning maps and revenue information into a program that highlights the next underappreciated block that's taking place today. Jersey City's future real estate champions won't necessarily be deep-pocketed developers, but data-equipped, digitally native investors. But growth isn't just financial, it's cultural. Walk through downtown on a summer night and you'll feel it. Food markets, outdoor cinemas, waterfront festivals. The city has turned nightlife into neighborhood branding. Families, students, remote workers, and creators coexist in a new rhythm. The once quiet skyline now hums with global energy. For many, Jersey City isn't an alternative to New York anymore, it is New York's evolution. However, in all the glamour, locals have a pressing question: who becomes left behind? Higher property taxes slice into small homeowners. Renters have bidding wars. Cultural landmarks are threatened with destruction. The challenge of the next decade is sustainability. Can Jersey City grow without becoming Manhattan's duplicate? Urban planners are promoting green architecture, rent-stabilized housing, and AI-driven energy to grow smarter, not taller. The fate of the city will rest in its decision between profit or permanence. And if you think the boom is over, you'd better think twice. Mega projects such as the SciTech City Innovation Campus, new path expansions, and waterfront redevelopments are just beginning. Each new infrastructure project generates billions of dollars in long-term property value. Professionals estimate that by 2035, Jersey City could outprice Hoboken and even some sections of Brooklyn in median price per square foot. Investors call it the silent Manhattan migration, and it is just beginning. So what does it all mean to you, then, the viewer, the dreamer, the prospective investor? That the window remains ajar, but only for now. The best opportunities are in what others overlook: duplexes in up-and-coming areas, fixer-uppers within 5 blocks of a path stop, or small mixed-use structures drawing the remote work crowd. Use data. Pay attention to migration patterns. And don't forget, real estate success does not come from pursuing mania. It comes from recognizing before the rest of us do. Jersey City's story is taller than tallest spires. It's a blueprint for modern city revitalization. A city that would not be ignored. A skyline that started in steel and drizzle. In an era where territory equals power, Jersey City built its own kingdom just across the river. The question isn't if the boom is real, it's if you're going to be included. Because the skyline you're looking at today isn't the destination, it's the departure point for what is to follow.